Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, if you've been following along with our market reports, you are seeing the percentage of accuracy being the highest we've had in a long time with regard to forecasting the markets. And I have to give all credit to the candle charts that are giving us these signals to buy, sell, and protect. Each and every week I leave my lines on the chart so that our viewers can see the evidence of how accurate candle charting really is. And as you can see from the diamonds here, this diagonal line is the line that I drew from last week. Here you see Friday's close right there. I said we would go up, and I drew my horizontal line there as my target. Amazingly enough, yesterday we had a doji candle. That's what that is. It looks like a cross, and we came within pennies of that target line right there, and then we pulled back. So that's the forecast. That's the accuracy of candle charting, and I'll do the same exact thing as I draw my forecasting lines for next week. I'll first erase all of these lines, remove all the drawings, and then from there we can draw new lines. So here we go. As you can see, that doji is a pivot point. That's usually a sign of indecision. And as we look at the close from today, we see a big red candle. So my forecast for next week is that we will move lower once again to retest these lows right here. So I'm going to leave that in place just like that, with the end of that line being my target for next week. So that's the diamonds. If we look at the spiders, ticker symbol SPY, that's the S&P 500 index, you'll see that I left my lines on the chart once again from last week. Here was the close from Friday. Monday, Tuesday, Wednesday we moved up. Thursday we gapped up, and look at that. Today we closed within pennies of the end of my line right there, which was my target right there, right around 215.91. So again, the technical charts show us every week for many months now how we can use the signals to forecast price action. And what we do here at the Market Guys is we teach people how to read the charts with accuracy, just like that. And it's not as hard as you might think. You just have to plug in and stay connected with the Market Guys and follow along with us as we go through the market reports. Now, next week, same thing as what I mentioned in the Dow. I think we're going to pull back just like that, and I'm going to end my line right there. I think we'll pull back to the end of that line. That's right around 213.50 for the spiders, and that's the forecast. So next week we'll leave that line there, and you can compare and see what happened, how it all played out. Now the Russell 2000, very interesting. I did say we would move up. We did that. And for those who are long, I'm sure you're not going to be too upset that we went a lot higher than what I originally forecasted. But you can see that I was expecting the pullback at the 20-period moving average. Lo and behold, what's happening is we are seeing the pullback from the previous resistance line right here. You can see that that's the resistance. So I'm going to keep that as resistance, and I'm going to draw my forecast line, which is going to be just like that. I think the Russell 2000 can pull back to fill that gap right there, and I think it'll match what we see in the 20-period moving average. We call that the rubber band effect. When a stock or an index moves far above or below a moving average, we call that a price divergence. We generally see the rubber band snap back. That effect will pull the price right back to the moving average. So the end of that diagonal line right there is going to be my target for next week. Now if you look at the VIX, ticker symbol VIX, this is the volatility index for the S&P. I said we would pull back, and we did. And we bounced, or was starting to bounce right at the point I said we would bounce. We went a little bit lower. We are now bouncing off of that support level right there. So what I'm going to do is I'm going to erase this line for the VIX, and I'm going to redraw the forecast line for the VIX, which is going to be higher. I think that the VIX is going to move right back up, just like that, and test that first level of resistance right there. Now, this 2-day candle pattern is very bullish. That's called a harami. Japanese labeled that as a pregnant candle. That's what that means. And it's very bullish. The fact that we're bouncing off that support level, again, confirms that bullish sentiment. And the VIX is a contrarian indicator to the S&P. So if the VIX is going up, then we are expecting the S&P to drop. And we already discussed that when I drew my forecast lines for the S&P. So keep an eye on the VIX. It is one of the best leading indicators outside of volume that you can find. And we use this and we keep it on our watch list. So that's the VIX. If you're interested in learning more about the market guys and what we do, we are the premier financial educators. We offer a lot of content for free. If you go to our video tab, you'll see that brings you to a video library that will bring you to a series of short videos called Market Shots. And you can see, second line down to the right, is the video that outlines the rubber band effect and what I just mentioned there for you. So feel free to go to our library, get that free education, tune in, and we can track these markets each and every week as you follow along. So have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the market guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.